Okay, again, right, let's get to this. Right, for those of you who are beginners or been trading quite a while, for this task, it doesn't really matter. It doesn't really matter whatsoever. We're looking at pivots. First of all, I'm going to go through my charts, look at a few potential trading examples and what's cropped up and what is happening now, more on a technical basis. As if you logged in on Tuesday, we go through some more of the fundamentals of trading and what's going on in the trading world and the economy itself, that what could potentially move the markets and what we should be looking out for in the following days and weeks to come. But this tonight, it's all about really price action, technical analysis, my favorite, and precisely what we should be looking at on our charts and breaking everything down. So how do we do this? Well, first of all, we look at pivots. Now, this is what I've got here on my chart, on my Infinox trading account. Again, it's a demo account here. I'm just testing some trades, and we actually share our real trading accounts with Infinox account holders and members of our Signal service. So that's where primarily who gets to see our real trades and the background stuff. Now, just for the webinar use only, we just share the demo account, and we sometimes even place a trade. I may even place a trade this evening, just to give you an example. I dare say we probably will. Again, it's just on a demo account. It's not advocating any sort of signal on this webinar itself, just for demonstration purposes only. Now, what's a pivot? Now, what is a pivot? I get asked this a lot. Matt, you trade with pivots. What the heck is a pivot? What's a moving average? What are the differences? Now, pivots this goes back a few years actually, before private computers and all the computers and technology they have on the trading floors now. And when top traders, you saw them in the little pits, the trading pits on the exchanges, on the New York Stock Exchange, on the London Stock Exchange, sorry, the New York Stock Exchange as well, yeah, and calculating prices by hand. Now, what you've got, it's the measurements of the previous price action. So if you've got a daily pivot or monthly pivot, they're measures of the average between the current pivot and the previous pivot. It's very simple. Now, for instance, if you're looking at a daily pivot, you look back at the previous day's price action and today's price action. It's that simple. Now, we've got weekly on here. As you can see, we go back from the 10th. You can see, it's going to go back again. Go back here, you can see the difference in pivots here. This is where the week breaks up. Okay. Now, this is where the weeks come to an end. So the 4th, every 7 days, these pivot prices change. They have to. They can't be the same price, because you've got different price action one week, you've got different price action another week. So it's like moving averages. They fluctuate according to the time frame that they're plotted by. So these change every week, the ones I've got plotted here. But for an example, let's use this actual week's worth of pivots. Now, if you look at the previous price action and this week's price action, you simply measure the two, and the pivot gives you the average of the two. It's that simple, similar to a moving average, but these are slightly different. Below a central pivot line, well, our central pivot line would be the 0% line. So we've got that here. The 0% line is what's going across here. I'll just highlight that again. This year's the 0% line. Now, over the course of the last week, that is the average of the price action. So that's the middle, that's the base, and we've had a lot of price action above that point. This is for dollar yen. I should say this is the market for dollar yen right now, the chart for dollar yen. We've had a lot of price action above and a lot of price action below. So it comes to the central pivot average point for this over the last week is here, 110.67. That's where we are. So anything below this central, what's always been known in the trading community, it's not an actual rule of thumb, but what is known as below the pivot line, the central pivot line, is known as the buy-in zone, and the zone above it, you probably guessed it, it's known as the sell-in zone. Now, obviously, the deeper you go into these zones, the stronger that these opportunities arise and the stronger the actual potential signal you have. Now, obviously, if the price jumps up through the central line, for instance, if we just had a rally up through here, through the central 0% line, then you may well look to buy and not to sell, because there's a sudden price action up through. The market could have quite a bit to go before it looks to sell off. So it's not an immediate sell signal just because it crosses up through by a couple of pips. And it's the same for the downside. Sometimes you want to let this run up through, run out of steam, and sell back below. It all depends on what other tools we've got in our armory. Now, for instance, you can see here the price. This is the yellow line, remember, 110.67. This price surged on the 4th, okay? This was after the Bank of England came out and the dollar done extremely well. So this is where the market surged, come against a little bit of stiff resistance on the 0% line, the central pivot, and then all of a sudden surged up through, and it touched another 2 pivots before it then sold off. Now, we weren't looking to sell immediately, even though it actually came back off when it got up through here by a few pips, but that wasn't a selling indicator. That by itself is not a sell. There's so many other elements to this, very simple elements, but you put them together and they create a strong signal. Now, you would not look to sell here. For me, how I trade these pivots, I look for the market to tell me when it's run out of steam. Now, a rally up through the central pivot doesn't tell me it's going to sell anytime soon. It tells me there's quite a bit of strength in the market, and it could well go on to rally another 10, 20, 50, 100, 200 points. It's for when it touches another pivot above that, and its price action and its merit in order to really push through those is what tells me when it's ready to sell back off. And it's sort of price action here on the next 2 pivots, and it touched and sold back off, couldn't really get back up through the next pivot, and continued its price action back below these pivots. And you can see here how really crucial this central pivot line is, because it meandered here for the next 3 sessions, end of the week and the start of this week, where it then really tried to set a base here, sold off below, really did try and rally back up through, but had absolutely no sustenance to this move, and then sold back below. And so you can see how central this pivot is to the entire picture of all of the pivots. And of course, below there then you've got other breakdowns through other pivots, and combined with other indicators, they work very well. What I've got here is indeed a Fibonacci mix of pivots. This is not Fibonacci retracement, neither is it just your standard pivots. These are weekly blended Fibonacci pivots. They're a weekly average. So this combined with Can you still hear me? Sorry, I think I went off there. Don't know what happened then. Apologies. Let me just go back to that. With the RSI and the MACD, with everything, with all the elements combined with our moving averages, these, with the pivots, give a very strong signal when they're set off. It's not just the pivots themselves. The pivots themselves just show us an indication of potentially what could be good. What could be good in order to see a directional turn, or a market run out of steam, if you like, or a pickup in momentum. See, for instance, here we saw a big resistance after it sold down through several pivots. The market attempted to come back up and head back up through the 61.8% pivot line. Now, for me, let's get it out of there a second. Now, for me, this showed quite stiff resistance, and 2 attempts, which has created what is known as a head and shoulders. What is known as a head and shoulders in the market is when you've got one side creating a resistance zone, or where the market failed to break through a certain moving average or pivot point, and then the market sells back off and sort of creates their head. This is an inverted head and shoulders, I may add. So we've got one here, then you've got the head, and then you've got another test which matches the previous test on that moving average or pivot line, and this matches the level perfectly, absolutely perfectly. Look at that. So it's an inverted head and shoulders for one, and that by itself is a good indicator. So we've got that, and the fact that the inverted head and shoulders is not just at any old level, it's bang on a 61.8% pivot line. Absolutely perfect. And then from there, the market goes on to sell down below the next pivot and all through the moving averages, creating an extremely good sell signal. Now, I was hinting, I didn't specifically say, I don't like to specifically say anything on these webinars, if you like. That's sort of left for the Signals service and other courses that we have running. But just for the free training webinars, I do hint at sometimes. And on Tuesdays, I did hint that there was potential weakness in dollar yen, and that selling that would not be potentially a bad idea, because that was what I was looking at doing. I wasn't recommending it, but I was just saying that's what I potentially thought. There was weakness creeping into the market there on the 8th, when we were at these levels here, and creeping down below after we'd sold off down below the central pivot line. And exactly this time on Tuesday, 48 hours ago, that's precisely where we were. We were just here on this level. Let me just highlight that again. I'll get my old trusted highlighter out. We were just at this level here, where we just sold below the moving averages and the central pivot line. And since then, we've sold off, tried to come back, and sold off mightily again. So it's basically dollar, not so much yen strength for that, it's dollar weakness. Okay, has someone got a question? Oh, that's all. I just saw a hand raised there. That's all. I thought somebody had a question. That's all. Maybe I missed that. If you have, again, please raise the hand again, guys. I'll probably come to that back later on in the webinar. I'll be taking some questions at the end, so not to worry about that. You're not going to miss out. I want to get through. If anyone's got any questions whatsoever, you need to know anything quite urgently, not to worry. That's why we're here. So no problem at all. Now, okay, so that is dollar yen. Let's have a look at one or two other markets. I just want to say, first off, then dollar has hit some resistance. So there was an article earlier on forexlive.com, the website that we use for the economic calendar. I think it came up by an analyst saying, drip, drip, the US dollar continues to bleed lower. and basically it got me thinking that, well, obviously all our dollar-related pairs are going to be in for some good moves. So we hinted at that on Tuesday for dollar yen. Let's now go and have a look at pound dollar. Now, remember, pound came up against a stiff bout of selling on the 8th. As you can see, dollar yen, actually, go back to dollar yen back on the 4th, I should say. Back on the 4th, came up some stiff selling pound dollar after the Bank of England meeting, which didn't go down too well for the pound. Obviously, there was that pause there, and they came across rather dovish, more than the market had anticipated or than the market had been looking for. So pound really sold off against the dollar. Now, since then, there's been a lot of dollar weakness, so pound's been looking to come back. Just going to move this out of here. Now, pound dollar, dollar yen, and euro dollar, they're pretty much my three favorite pairs to trade, guys. They're the three that I like. You remember, euro dollar is the most liquid pair there is. Trillions of dollars are moved in and around the euro and the dollar combined in any one trading day. So they're the most liquid pair. They have the best spreads, and obviously Infinox have a great spread on euro dollar. One of the leading competitors, I should say, in dealing these top major FX currency pairs. This is why I use Infinox. Now, pound dollar, let's check these out. Like dollar yen gave us some great examples on touching these 0% lines and the central pivot line and these other pivots in general. Now, let's look at some other simple clues as to what the pound dollar has been giving us over the last few days and as to how we can use that going forward. Now, pound dollar, again, need I say, check it out. This is where we are, the central pivot line. Right there, our mummy central pivot line. She's the heart of the family, okay? She's the base, she's the stronghold, the matriarch. This is our matriarch of the chart, if you like. And spanning the perfect average over the last week of trading, the weekly average of these pivots is this level here. Now on the 8th, which was Tuesday, at 130.34 was our level, sort of 130.34. You can see it says the level there. I'm actually going by the between 32 and 38, so there it is there, 34. I always do it the hard way. Now, the sell-off below there, it actually came perfectly as when the market sold off below its three moving averages, not just one, but the 110 that we've got here, the 55-day, and our shorter-term moving average. I'm not saying what that one is. You should have been here Tuesday. Wait for Tuesday's recording. I'll tell you on there. And it sold off down below. We've had a mixture of reasons here as to why this was a perfect sell. There's about three other elements to this trade. But also on top of this, we had the market cross down below our central 0% weekly average pivot. And look at what happened. It absolutely died a death. It sold off, over 100 pips in just what, 4 hours, 5 hours? It's quite a substantial move, guys, for a currency pair. It's about for pound dollar especially. Now, again, what have we got here? It's sold down below the 76.4% retracement line. And before you knew it, within 4 candles, within 1 hour, bearing in mind, guys, this is a 15-minute time frame. Please be aware that's mainly the time frame that I use. I use 4 hours daily for looking at sort of weekly trades, and for my sort of intermediate short-term trading, I use 15-minute chart. And every bar you see here is worth 15 minutes. So as we got here, this next blue bar will only last for 15 minutes. Okay, and then you've got the open, high, low, and then the close. The little wick each side is the open and the close, and then obviously the tall part of the bar is with the high, and then the short part of the bar is where its low was on the session. It's very simple. Now, it hit a low here just below 129.50, but it recovered quickly. 3 blue bars back up above, I should say, 76.4% line. So that recovered quick. Now, by itself, that's not enough to tell us that the pound dollar's found a low. So if you've just sold off here, which I think some of our signals people got in on some trades with that, you just sold off and you would have closed out. Okay, now you would have taken 80, 90, 100 pips. You're happy with that. Now, do you then look to get in and buy? No. There's not really any signal here anywhere to say, oh yeah, we're going to buy. Just because it's bounced back some, it's now probably going to rally 100, 200 pips. Well, we don't know that, do we? We don't know, and we can't guess that either. You could guess if you wanted, but you'll probably lose more times than you'll gain if you guess. So we want to take the guesswork out of this. The market came back, it's strong, great. Now, invariably there's a few signals in and around over the next sort of day and a half or 30 hours of trading. But then look at where the market sold back down to again after trying to attempt to get back above the 23.6% line and back towards its matriarchal line of the central 0%. It failed to get there. Now again, that in itself is an indication that market has probably come back and is looking stronger than it is weaker, but it's not quite a buy signal. And the fact it failed to get up towards the 0% line and failed and came back is not a sell signal in itself, but again, it tells you not to really be buying, not to really be selling. Stay out of the market. There's strength there. It's limited, but also there's no reason to go short. So you're neutral. This is where you must know when to stay out of the market. Price action tells you, okay? Now, there was an actual perfect buy signal here with up through 2 moving averages. There are 2 reasons I'm not going to go through why this was a perfect buy signal, but one of them was up through 2 moving averages by a specific amount. Now, it rallied up through 2 moving averages by a specific amount, and then what do? Well, the market then came back off. You may have hit already your 15-20 pip take profit, and you're out of the market. But again, as I said, you're not looking to sell at this point. There's no real reason to sell, but you're then neutral again. Sometimes it's always best to know when to stay out of the market. That's what took me 3 to 4 years to learn. I always wanted to be trading it, and a lot of traders will tell you this. They always felt like they only really deserved to make money or felt really active and a part of the market when they were trading. When they said, "Oh yeah, it's okay. I got a dollar yen trade on the go. Yeah, I'm in the market. Yeah, I've got 2 trades running at the minute." And if I couldn't say that, I didn't really feel like a trader. I never really wanted to say to someone, "Yeah, well, I've not got anything running at the minute, but I'm sort of looking. Yeah, I'm on the sidelines. Yeah, I'm just sitting down, just waiting." It doesn't really sound good, does it? So, but to be honest, it's a lot of the time, not just some of the time, that's what you need to do. It's just be on the side. Mark Weinstein said it best. He said, you must prepare on the sidelines and wait for a sick antelope to approach, one that's very sick, very lame, can barely crawl to find any prey. And then before you know it, once that's taken its last breath, you then pounce, and then it's your prey. Didn't word it exactly like that, but the premise of it is you must just pounce when the opportunity is actually glaring at you in the face. You don't pounce immediately when the antelope is approaching because he could see you as its prey. You don't know it's sick and lame quite yet. So you have to wait for something to present itself, give you 2 or 3 other indicators or indications and confirmations, and then you pounce. You can go around and find 50 trading opportunities tomorrow, but 35 might be bad, 15 might be good. But it's all about turning it in our favor and us trading 35, 40 good ones and maybe letting 10 slip. So again, I went off on a tangent there, but that's where you get through this sort of messy period here and not worrying about, I'm not in, but you just wait. And then of course, look where it sold down to, the exact precise level that it found support at just 2 days previous. So a day and a half, sort of 40 hours previous, below the 76.4% pivot line, and pretty much pip for pip, just below 129.50, probably 1 pip in it. The bar found its low right there. It's an eerie, isn't it? And then it, again, what I like about this, both within 2 bars were back above the 76.4% pivot line. So again, it's not confirmation to buy, but it's definitely confirmation that telling you there's a base there, there's support there, there is some strength there, absolutely. And there was actually one signal to buy back up through here. I'm not going to tell you exactly what it was, but there was one precise signal on the way back up. Again, the one clue is one move up through the moving average, and the pivots have got something to do with it, and also the RSI and MACD have as well. I'll let you maybe figure that one out on your own and decipher. You can always email me, no problem. But again, a lot of our trading signals are formed from charts, not precisely like this, but similar to this. And there's a good strike rate at the minute, well over 70–75% strike rate on the signals, which is something I recommend you checking out. Now, again, apart from that, personally, I'm looking right now where we are precisely. I'm more of a bull on pound dollar than I am bearish right now. Two reasons. I'm not advocating a buy here. I'm not in the market myself. I'm just out. As you can see, I'm not got any trades running, but I'm looking possibly to get long pound dollar sooner rather than later. Now, the reasons are we're in and around the 130 level. Now, what you must know about trading, if you're a novice or intermediate, the round levels are crucial. Now, when I was lucky enough to trade for a large hedge fund, back only 2 years ago, in 2015, before they actually split up. Unfortunately, the funds split up in the end, and it all got traded off around the world, and it all got into other fixed income and everything else. It all got, and there were boards involved. There were 20 people on the board, and it was just annoying, really. It was all sort of politics involved, why it got up. But I'd actually made them quite a bit of money, and these are some of the techniques that I used to make them. I made them hundreds and hundreds and hundreds of thousands of pounds. But it was signals like this. But what you must know, and the traders that traded there with me agreed as well, the round numbers are crucial. So for instance, 129, 128 for cable, 130 is a big deal. Now 130 is even bigger because it's an every sort of 1,000 level. It's not just a 100 level like 129, 128. It's moving in 100 pips. 130 is a 1,000th level. So whereas the market bottomed out below 115 and 120, you know, post-Brexit and the flash crash end of last year, that was sort of 1,000 level because you've got one-to-one parity, 110, 120, 130. These are huge, huge levels. Now the market, every time it's got back to this level, has sort of burned off over the last couple of months. When the market has got back up towards these levels, I'm just going to go back to 1 hour on this. And as you can see, every time the market's got sort of 130, it's sold back off. I'm going back again. Perfect example. The market worked very hard, getting up to 130, 130.30, sold back off down towards 128, 127. Going back again. I mean, look at this here in April. Huge moves from 125. Huge. Came back up towards the 129.78. It nearly touched 129.80 here. Again, double top. Head and shoulders, perfect. Remember that reverse head and shoulders we were talking about? Here's a head and shoulders here. Here's the head, shoulder each side, down. Looks like a bat, really, doesn't it? It's more like a bat or an eagle, I'd say. Head and shoulders. I'm going to rephrase that. Now, and then, of course, it's sold back off. More attempts back up to break 130, failed, back down towards 127. So the 130 level is key. It's a huge level, huge level. I'm going to go back to my trusted 15-minute chart, by the way. So that is the one for me. So that's where we are right now. And for cable especially, you can see even recently, even when we sold back down through this level, the other day, just on Tuesday actually, when I could see some weakness creeping in, it's tested back, hasn't it? The market's really trying to come back. Obviously, it failed at the 0% line, our central pivot line, and sold back off again. But again, what I like about this, at these higher levels, these lower highs, sorry, these higher lows, I should say, correct myself, higher lows, because obviously these are higher lower levels than they were back a few weeks ago, where the levels were 127, 128. So even though we've sold off to a low, they're still higher than 2 weeks ago, or even a week ago. So they're higher low levels. And that is a bullish sign. And it's the same on the downside. When you've got lower highs, it means when the market starts to really try and come back and start rallying, but then always fails. And it's always doing that back up towards, but every time it tries to do it, it's only going to a level below and another level below. That means they're lower highs. So these higher lows are bullish. They're making lows and they're creating support at higher levels. That's that. Because going back a week or two, again, they were 127, 127.50, 128. But now we seem to be bottoming out and creating bases above 129.50. Well, that's great. So for me, we've created a base here, a full support of 129.60, I'd say. And we're looking to potentially retest the 130 line. And if we do that and we can get back above the 0% line, that's for me, that's the big one. It's not just the 130 line. That to me will give me a signal. That will prompt my interest. So literally on my other chart, my other real trading chart, I've got a 130 and 130.34 prompt. So when the market gets back above 130, that's my first prompt. Okay, right, okay, it's back above its 1000th level at 130. Huge psychological level, and all of us top traders know that psychological levels are everything, because human beings run the market essentially. Even though there's a lot of algorithmic trading models out there, still the top of the chain, they're still human, just. And above that again, you've got your 130.34. Again, that's just for us to know. The oil market isn't, well, I'd say some are, but not everyone is aware how crucial 130.34 is. Some will, but not everyone. So it's really just refining things here. Now, when it gets back above 130.34, think, right, okay, now we're back. Now here's a potential, as long as the other elements, yeah, are favorable to us and tell us yes, buy, then we're in. Then we're buying pound dollar in the safe knowledge of it's back above its psychological 130 base level. Mother Nature, its 0% line, hoard of the chart, strength of the chart is now holding us. We're back above that line, and that's our support. And the other indicators that are crucial to our makeup of the trade and the cosmetic of the trade, the trimmings, if you like, that's all in our favor as well. Because two things even would put me off right now. We've got downward facing moving averages, because again, we are on some downward momentum here on pound dollar since it topped out here at 130.12. Again, another test of 130 failed. And the only thing that could stop us, guys, from really getting above 130 and 134 and persisting higher to maybe even 133 is this slight head and shoulders here at the 23.6 resistance. So that's the only thing that could really upset the pound dollar party, if you like. And as traders, don't forget, I mean, we're not wanting the market to go one direction. The beauty of this is, if it doesn't happen, and we then turn this into our view and say, right, this is actually one part of the makeup of the trade. This is just like if we're looking to get it back above 130 and 130.34, the 0% line, and that fails, well, this is the equivalent of the downside. This triple top at 23.6% line at 130.12, 130.12.1 is our resistance. And anything, all the other elements here and here that tell us, give us more confirmation on the downside, and potentially that break below the 76.4% line, that will be our confirmation of a sell. Just like our breakup through here with all the other elements would be the confirmation of the buy. Now, I don't care which way it goes. I'm not a pound bull. I mean, it'd be nice. I mean, I spend my money in pounds day to day. You know, I live in the UK. I kind of like the pound to gain in value, but as a trader, I don't really care. I'm buying or selling. Doesn't really matter to me. I'm obviously out of the market right now. I'm out of the market. Again, Fred over the road, Margaret across the way. She says to me, Matt, are you trading right now? I say, no, I'm not. I'm out of the market, ready to pounce on my next opportunity. So it's that balance of what, and to be honest, it's none of their bloody business. I know what needs to be had. When you're in the market, you know, you always should know the reason why you're in the market. And when you're out of the market, you should know and have your reasons ready why you're going to pounce when the opportunity presents itself. If you're clueless when you're in and if you're clueless when you're out, you're not doing the right thing. You're not following the perfect, well, not say perfect, don't like using the word perfect, but you're not using the appropriate strategy. And that's the trouble. That's where a lot of people go wrong. People get into a trade and they have trouble exiting. They can't, oh, what am I going to do now? Oh, I'm £200. Oh, I just lost $150 in the last 5 minutes. What do I do? Well, you should have your target and take profit, stop loss at the ready, already in. And again, I went through this on Tuesday, 1-to-1. If you do 20 pip stop, you do a 20 pip take profit. Never go less than 1-to-1. Obviously, you can go 2-to-1, look to make 40 pips and have a 20 pip stop, but never just put a 10 pip take profit if you're doing a 20 pip stop. You then go in 1-to-2, and then it's 100% not a disadvantage because the trade might still be good, and there's more chance of you getting that 10 pips than losing the 20. But why do that? Why put yourself in that position? All right, and that's that there. So for me at the minute, where do I think it's going to go? I've got this inner feeling that pound's going to sort of really test 130 and probably break it. But again, I might be wrong. And if I'm wrong, it doesn't cost me any money, because if it doesn't happen, I'm not in on a buy trade. I won't have got in until it actually happens, until this confirmation occurs. I'm not getting in. So it's not going to cost me any money by being wrong. I'm only going to wait for the confirmation downside. Obviously, at the minute, it's closer to happening on the downside. So this could happen later tonight or tomorrow, and we might well be selling. But with everything else out there in the market right now, talking about, oh, here it is, I've just found the Forex Live. Let me try and get it up. I've just got it over there. There you go. Remember I said earlier about the drip, the US dollar continues to bleed lower? Here it is. So obviously we've had a NASDAQ falling off below a crucial moving average as well. Dollar yen moving to session new session lows. So for me, I'll go back on the chart there a second. For me, it's having that overview. Now, the overview for me is I'm trading pound dollar. In the market, again, I want this to remain technical this session, but obviously you can't help but be aware sometimes what's going on fundamentally. And at the minute, dollar's taken a bit of a hammering. So this can work two ways. Has the pound only enjoyed recent gains and attempting 130 again because the dollar's taken a hammering? Or is there more dollar hammering to come? In which case, pound will eventually break 130, 132, 134, that 130.34 level. But if the dollar now stops taking a hammering, it's taken a hammering for 2 days. Gold's also rallied as well, 30, 40 points. So if the dollar sort of recovers and then finds a new breadth, the metals come off, metals that are priced in dollars, that is, like silver and gold. And then you can look at pound dollar to then retrace, because then if there's renewed strength in dollar and then the market's loving dollar again, pound will probably suffer against the dollar, and in which case break this floor of, really, even though it's below 76.4, which is 129.63, if we really sell below 129.50, it's looking weak. Again, unless all my other cosmetic bits of makeup, okay, I've got my eyeliner, I've got my blusher, all it paying into account right here in way of my moving averages and pivots. And my RSI and MACD. They're my things that I cannot do without. Now, if they all say yes, when the market sells off down below 129.50, we're in business. So it's going to be interesting over the next couple of days, the next couple of trading sessions, precisely what's going to happen. And right now, I've not got a crystal ball. I don't know. But I know one thing. I've got a personal opinion, and that is potentially, I think, well, it probably is. I'm kind of just hoping that the pound will probably go back higher. Emotions do get in the way sometimes, but again, as long as you follow the rules, and as long as you only trade on confirmation of your chart setup, it doesn't matter if you've got a personal opinion. As long as you literally don't let that stop you from trading or acting as and when you need, doesn't matter. It doesn't stop me from acting anymore. It did the first few months of my trading, I must be honest, because I thought I was always right, of course. And I didn't like to admit when I was wrong, and that literally the price action in front of me wasn't really happening. It couldn't be, because I hadn't accounted for it. So those are the psychological things we're going to go through in other training videos, and how to really bleed them out, run them dry, so that they literally fizzle away. You don't want to be holding on to those, those mental games. Now, so for me, I might well be wrong. If I am, I don't care. I'm happily selling down below these lower levels. And that's really it, guys. I've gone through dollar yen, gone through pound dollar. We've gone over why, talked you through what a pivot actually is. And we've looked at what's on the main bourses by way of Forex Live. Again, this is what I use for the economic calendar. Again, I'll just mention this really quick. Economic calendar, let's have a look what we've got coming up tomorrow, Friday. Let's go here. Now GMT time, we want GMT +1, because we're not GMT right now, we're 7:02, and we're looking to 11th of the 8th, Friday. Now, we want to look 3 balls here. We want 3 balls to specify a high important data release, and we've got one tomorrow. Core CPI, right? Inflation. So 1:30 tomorrow. US, huge piece of data. Core CPI. Okay, and click on it, tells you more information about it. The core CPI measures the changes in price of goods and services. Now this is the inflation measure that all the market looks for. Okay. Not a lot of this is already factored in. It's a very, very well-awaited piece of data. Obviously, the expected is 0.2, previous 0.1. So we're really going to be looking at this tomorrow. So if you're looking at trading pound dollar, just before 1:30 tomorrow, I would hold off just after the announcement, because one way or another, if it's a poor signal, we might well see that pound dollar creep up. If it's a good number and inflation is taken well, the inflation number is taken well by the market tomorrow, dollar will probably come around good, and we will see the market sell off down below this 129.50 level, and then everything else by that point will probably be confirming that. Okay, that's that, guys. So again, look out for that tomorrow. Be aware of when these data releases are. I did say in the previous video and training video when to check them, what to look for, what days, what currency pairs to look for, how to set up your chart. That training video will be out later tomorrow. And again, please be here for the next one. This is being recorded. It will be shared very shortly. And that's that, really. Are there any questions you want me to run through quickly? We've got about 5-10 minutes left. But that's really all I wanted to get through. Probably 5 minutes in good time, actually. Probably myself speaking quickly got through it, but I think hopefully it was concise enough for you guys. But it's a lot of information there, a lot of good information. I don't really like talking for an hour and a half, 2 hours. I think 45-50 minutes is more than enough, because that's when my attention span starts to wane as well. So I know what it's like being on these webinars. Again, a little bit bored. So hopefully it's not boring. It's just enough information, just the right amount of time for you guys. Again, please, you had the polls there. 100% yes. Do you have aspirations to join a financial institution? Be great if you are. You want to take your trading to the next level, and all of you said less than 6 months as well. Most of you less than 6 months for your experience, which is good. Again, sometimes it's good to start afresh and not have any other trading strategies, or not have any of the old sort of habits that you may have picked up from other strategies and other ways of learning that you didn't really learn the correct way. So don't be worried at all. If you've been trading less than 6 months, do not worry whatsoever. I'll factor all this in over the coming training video, over the coming webinars and other trading videos. As well, the handouts, please guys. Obviously the signal services are there. Message support for more information on that, and the institutional trader program, which we've got slots coming up for, I believe, later this year. It's going to be good, end of October, just after Halloween. Again, message into the guys and I'll give you more information on that when it is. It's all there in the PDF, and yeah, that is a top course accredited with CISI and the London Stock Exchange Group. You probably can't get better, to be honest. It's the go-to place is Knightsbridge Training Academy. So if that's not it, guys, if there's no real questions out there, I'm disappointed if there's not one. I mean, I think there's one coming through. I think I'm getting a private message. Just don't know how that's got out there. Matt, how long have you been trading pivots for? Well, I've been trading pivots probably 6 years. I've traded a selection of pivots, dailies, monthlies, weeklies, and I do tend to tweak them. But what I think I found with the weeklies, I found a good average, that they're blended with Fibonacci retracements. They're not specifically Fibonacci retracements, but they're blended with them, so they're taking an average of that as well. And with my moving averages and MACD and RSI, I think they work well. They're not, I wouldn't say this is a reactive form of trading. Obviously, with fundamental data and other bits of price action that I look at as well, and I sort of have a level 2 type feed as well, and bank order levels feed that I get. So I'm kind of knowing what certain banks are looking at certain currencies at certain times. That's always handy to know. And with that, with all the information at my disposal, I just run with what is confirmed on the chart. Other than that, you then just got to leave it do its thing. You don't just sit by the screen with bated breath, 20 hours a day and just try and will the market up or will the market down. With all the will in the world, it will only go where it wants to, not because where you want it to. And that's what you really have to get to grips with, is not take any move personal and realize that the market doesn't know you're involved. You just tag along, jump on the best momentum price action you can, and go along for the ride, and then get off before it crashes. Or before the horse has enough and tips you off. So that's what it's all about. And generally, on average, for the very short-term trades, the 15-minute chart trades that I look at, we look to get 20 pips out of these pivot stroke moving average trades, 20 pips per trade. And obviously with that, 20 pips of 20 pips of stop loss. So just quickly, if we were to sell off, for instance, say for instance we sold below the 76.4% line and we sold at 129.54, okay? I tell you what, round it at 129.50. Again, I wouldn't do it at 129.50 because I want to see it trade below there. But say at 129.50, what I would do, my stop loss would be 129.70 if I was selling. So it would be there on the red line, 129.70 stop loss. And it would be, obviously, if the market price was down here, then my stop loss on the upside would be up there, again, above the pivot line, so that would give me extra support and an extra cushion. So it would be there, and my take profit would be 129.30, much lower down on the chart here, 20 pips away. And again, with that kind of momentum, breaching all these lines, it would probably touch that before it reversed and touched back. But again, you'd want to make sure it broke that 129.50 line, because just like before, this quickly corrected and bounced back up through towards 130, in which case your 129.70 level would get taken out, even if you did have this support level here, resistance level that was acting as a buffer below your support stop level. That makes sense. So I would want extra confirmation the third time, and obviously with this being the third test, as it's found two supports before at these levels. If it's sold down below with vigorous momentum, for instance, if there was good dollar data tomorrow as well and pound was reacting to a strong dollar, the RSI and MACD showed me a good figure, and the moving averages were pointing down still, and we moved forcefully below 129.50, that would probably be the third time lucky. Generally, the third attempt, if it breaches, is generally the strongest. So then that would lead me to believe, yeah, we're heading lower. So we would probably get in something more like 129.40, I imagine, in which case 129.60 would be your stop, and 129.20 would be your take profit. So this is just to give you an idea. All right, guys, other than that, thanks for that question. I shall leave it there. Again, you've got the email addresses for support, myself, matt@ktafx.com, and there are other support emails as well for KTA. Now, you've got the handouts there. We've done the polls. Thank you for participating. Very, very obliged on that. Thank you so much. The recording for this can be requested and sent out, no problem at all. Other than that, thank you very much, guys, and I will be online next Tuesday. And for other members, I'll probably speak to you before that. Thanks very much, and enjoy your evening.